Big worry, guys, was whether or not Apple would see a bounce this morning, and it is up along with the other big trade names, Caterpillar, 3M. You see us up 134 in the Dow. We should get a bounce even without the president's tweets. We were in dramatically oversold conditions. I mean dramatically on several key sectors, energy stocks, semiconductor stocks, even the Dow Industrials on a technical level dramatically oversold. China stocks also dramatically oversold. All of these are among the big bounces. This makes a lot of sense. This is where much of the damage has been contained. S&P 500, a lot of people keep telling me, hey, Bob, we're only 4% off of the old historic highs in the S&P, and that's true. There we are, only 4% off. That's the good news. The bad news is there's a lot of damage being done because people are calculating the effects of these tariffs now that we have real numbers on them. So recently we saw Barclays, just yesterday, talk about the GDP declining 0.2 to 0.3% on tariffs. UBS, we did this Friday afternoon, GDP down 0.25%. So here are real estimates about the impact overall. And you can see a lot of the damage that's already been done. Let me just show you some of the big trade names, how far they are off their 52-week lows. Intel, Boeing, Caterpillar, 3M, Apple, all 20% or more off of their 52-week lows. Let me just show you what J.P. Morgan had to say about the impact of all these tariffs on Apple. This was just out this morning. They said Apple would need a 14% price increase on their iPhones to offset the tariffs, and that the cost of the tariffs could reduce iPhone's gross margins by 4%. Here's the exact sentence. Assuming roughly a quarter of iPhone shipments are imported into the U.S. following assembly in China, we estimate absorbing the cost of the tariff would imply gross margins on total iPhone revenues decline by 4%. Well, let me show you Apple. They're not waiting for J.P. Morgan to come out with these. The market already knows this. This is why Apple is down 8% this month, because of the potential erosion in iPhone margins if they absorb all of the costs of the tariffs and don't pass it on to the consumers. So the market's already figured out the potential impact that we've seen here. This is also true of other stocks. People keep saying, oh, we're not as bad as December. Well, have you looked at Intel? Intel is essentially at where they were back in December, just barely above that. There's a lot of other sectors where tremendous damage has already been done. I've been pointing out some of the industrials. 3M just had a disastrous earnings commentary, and look, it's the same thing as Intel at this point. It's essentially at new 52-week lows. A lot of the commentary on their earnings call regarding the impact of the China. We saw this on a number of other stocks as well. Dow DuPont had essentially the same situation. The concern here is we're in a global reset. We have to reduce global growth expectation, earnings, and the multiple on the market if we go ahead with the assumption that the tariffs are not going to be going away. And a lot of people are coming to that conclusion, that it's going to be very difficult to actually get them out. And a lot of this has to do overall with the elections.